Hello and welcome. And today, in this video, we will be discussing one of the critical milestones of anyone's financial growth. That is actually reaching 1 crore, the first crore in your life. Okay, so it's like 1 million. Now, in India, we consider first 1 crore. Okay, so people often wonder and always ask me why I talk so much about crores on financial platform. The reason is very simple. See, guys, your first crore fundamentally change your financial trajectory. So it take time and it goes like this, right? So the first crore, it take a lot of effort, it take a lot of discipline. So it goes like this, normal, and then after you touching that first crore, then it will go like this. So that the way it is actually growing because the mindset will change after that. So it's not just about having substantial amount of money. I know 1 crore is a huge amount, and most of you will be thinking in that way, but it's about the discipline, the effort, and the strategic mindset. I right from the beginning in this channel, I am talking about the mindset that you need to have. It's all about the mindset that actually, create wealth, and that you need to develop over a period of time. Along the way, when you travel with me and all those, you will be getting that. So once you achieve that first crore, your financial growth accelerates in ways you won't believe. So I told you, this is how it will be for 1 crore. It may be at your 40, may even be at your 45. But the moment you achieve 1 crore, it will grow exponentially. So what you need to do is try to get that 1 crore as early as possible in your life. Right. So that's why I always tell develop a skill. Always develop a skill, right? Select an you being an employee of a company, it is very difficult. Okay, so if you want to make, you need to do a proper business, and you need to be doing with you working with your skill. So develop a skill, select a niche where market demand your skill, or your skill have demand in the market, and then come to me. I can help you in that way. So this is how we will be proceeding this discussion. So let me go to the PPT. Guys, I'm coming from gym. That's why sweating. So let's move on to the PPT. So this is what we are going to discuss, the power of first crore. After that, it is going to grow exponential. That you won't believe the way it is going to grow. Okay, so see, understand the compounding over a period of time. So let's explore why your first crore take time, but it leads to exponential growth afterward, right? So for instance, if you invest 10 lakhs as a lump sum in stock market with an average annual return of, let's say, 12%. Okay, so it could turn into 1 crore in about, how much time it will take. It takes a lot of time, right? So the initial growth seems to be very low. That 10 lakh becoming 1 crore, it takes time. But here is the magic. To double that 1 crore to 2 crore, it may only take, we are talking about 12%. So you know the rule of 72, 72 by 12%. Either 72 divided by the number of years that you are looking to double the money, or 72 divided by the percentage, we will give you the number of years which is required to double the money. So here I'm talking about 12% on an average conservative return I'm talking about. Stock market, that's not the case, right? It will be 20 or even 25 or even 30%, depending on the risk appetite that you have. Decent mutual fund also giving 15%, but I'm talking about conservative. Okay, so which means 72 divided by 12, which is 6 years, or you can take it as 5 years. Every 5 year, you can again double the money. So after the first crore may take time. Then again, because 10 lakh become 20 lakh, it take a 5 year, and 20 lakh become 40 lakh. That will take, another 5 year. So three times it need to double, right? But here, after 1 crore, double to 2 crore. Then again, double to 4 crore. Then 4 to 8, 8 to 16. So four times, if you double it, it almost becomes 16, 20 crore. So that's how the magic is. Okay. So that's what compounding means, and compounding gains momentum, and that turns your disciplined effort into powerful results over a period of time. So again, consistency is very important. Let's move on to the next slide. That is talking about consistency. So compounding is all about consistent action over a period of time. You invested, you reinvest the return on that. Like that, you need to keep on compounding. So your investment need to space, you know, you need that space and time to grow. So you give money more the time, it will grow faster and it will compound more. So whether you start with small SIPs that we are talking about, or larger lump sum, whatever it is, the key is to stay invested in all cycles of the market, and you be part of the market all the time and resist the urge to withdraw when market fluctuations occur. Because money, the compounding is, or money is grown with time. So you may see sometimes money doubled. So immediately you will have the urge to withdraw. No, compounding will work with time. So that money also need to compound. Okay, so many people normally make the mistake of thinking short term, and interrupt the compounding process, which is where they fall short actually. So if you need to really compound the money, you know, you have to resist that urge, that temptation of withdrawal, even if you are making profits. Okay. So because this is not about trading or anything, you are investing, you are invested, you keep invested, it will only grow. There is no question about that. Now, coming to this, why fixed deposit is not working. We have already discussed this many times. So, reaching a first crore requires more than just parking your money in fixed deposits or conservative instruments like PF, right? For example, the same 10 lakh, if you are going for fixed deposit, it will be 6%. So it just beat the inflation and you won't get much out of it. The same 10 lakh value will be there whenever you take, or maybe less also because of inflation and negative interest rate that you're actually getting when you calculate the real interest rate. When I talk about real interest rate means what the interest rate bank offered, that is the nominal interest rate minus the inflation, that's the real interest rate. Suppose 6% is the nominal interest rate that the bank offering, but inflation is 8%, then you are effectively getting -2. That means you lost money by keeping invested in FD. So we are talking about FD is safe and you won't lose money. Yes, you won't lose money, whatever you invested plus interest you will get. But the problem is the value of money is lost. Okay, so effectively, I'm talking about real interest or effective interest, not the nominal rate. 1 lakh you invested 6%, you will get 1,06,000. There is no doubt. But the value of money for this 1 lakh, that time it will be 1,08,000, not 1,06,000. But you're getting 1,06,000 only. So you're actually losing 2,000 over there in terms of purchasing power. These are the concepts that you need to know. Okay, so again, if that 10 lakh, if you need to grow, it take 20 years to grow to something like 34 lakhs. But we have discussed how it is going to multiply to 1 crore so fast. So if you want to reach a crore with such low returns, it would take nearly 30, 40 years. So it's going to be very difficult. So that's why aiming for investment with returns above 6 to 7% will be always good, like mutual funds or diversified stocks, which is very crucial. Now, coming to your investment strategy, again, we discussed many times. So what's the best way to invest? A balanced approach, like allocate 50% of your investment in stable options like Nifty 50 mutual funds, 30% in mid cap or flexi cap funds, or and even 20% in the riskier small cap funds, so that where there is a more growth potential. And since you are diversified, the risk is also divided. Okay, so the spread basically allow you to benefit from the stability of the large cap stocks, avoid too much fluctuation, while get into the higher potential returns of mid and small cap also. So keep in mind that risky investments should only be small part of your portfolio to balance safety and growth. That's something which is very important, and again varies, depends on your age. Okay, now avoiding high risk traps. Okay, so people often chase instruments promising 20 to 25% returns annually, hoping to reach their goals faster. But yeah, while such returns are possible, there are mutual funds which have given such returns also, but they come up with substantial risk and unpredictability. The unpredictable nature is very important here. And if you see legendary investors like Rakesh Jhunjhunwala, so great returns, but those are rare in history. It may not happen for you. So it's essential to understand that taking on extreme risk can jeopardize your financial health. So stick to investments that provide a balanced risk reward ratio. That is very important. Now let's discuss about a real life example. So consider a case where an investment portfolio started at 50 lakhs in August 2021. Okay, 50 lakhs, August 2021. Recent example after COVID is what I'm talking about. The growth was substantial and reached 3 crore within a year due to disciplined investment and strong market performance. By July 22, the portfolio grew to 6.3 crore without significant changes to investment strategy. The key here is not to overreact to short-term market changes, but to stay invested and let the market work for you over a period of time. But here you got this growth mainly because of the COVID crash and the sudden recovery of market. So from 8,000 now, market is trading at 26,000. Nifty itself was, tripled. Such a huge index actually tripled. So this may not be the case, right? So normally yearly you will see 2,000 point move, but this is like almost 16,000 point move is what you have seen in the 3 years. That's substantial. Now coming to the mindset for long-term success, developing a millionaire mindset. This is very important, guys. Always the mindset is what matters ultimately. Whether you make money or not, it is a mindset is what decides that you make money. Because after mindset, only the skills and everything comes. If you have that mindset, the skills will automatically come. Once you have the skills, money will automatically come to you. Okay, so it's all about the mindset. First, develop that mindset, and then automatically the skill will come to you, and you can sell the skill and you can make money, you can invest that money, and then the money will work for you. That's the formula. So first is the mindset. So a millionaire mindset, it's not just about investing. It's about prioritizing your investments as non-negotiable expenses. So always understand your investment is not your income minus expense, which is a saving, which is the investment. No, your it should be the other way around. Income minus investment or savings should be your expense. So first, once you receive that income, you make sure that it is invested, you are invested, and then spend what is left after investment, because this investment will give you fruit. Okay, so don't wait to see what left at the end of the month to invest. First do the investment and then go for your expenses. So make your investment first and then live on what is the remaining. Okay, that's the rule. That's a simple thumb rule that you need to follow. That kind of discipline, guys. I'm talking to you so that the mistakes that till now you might have done and I have done, that should not be repeated. So at least the future generation should not repeat these mistakes. So that's why I'm recording this video. So this is a second birth for me actually after the cancer recovery. So I want to share the knowledge. That's why I'm doing this. So automate your SIPs. So automatically it will be debited. The moment the money comes to your bank, it should get debited so that you will live on what is left out, right? So that they happen regularly without manual intervention and irrespective of market cycles. Don't break your head on what is going on in the markets and other things. Keep on invested, stay with the investments. So this method actually allow you or not only ensure discipline but also help you to avoid the emotional decisions based on market trends. So you decide this day when money comes, it will be debited. So this day, this much is debited. It's not about you're waiting for a dip or anything. So you are not bothered about whether market is going up or down. You keep invested every month and you are looking for that average growth. Okay, so the country is growing, Nifty will grow, you will also grow, your money will grow. Now patience is the key. Always, that's the winning formula. Reaching your first crore demands patience, because after that things will be very easy. And don't rush into high risk investments hoping for quick results. Focus on improving your skills, expanding opportunities, and investing in your networks. Growing your income is as essential as managing your investing. Uh, Growing your income is what you might have seen this and heard this. It's about the skill that you have. You have a skill, you generate a skill, you can sell that and you can make money. That's about the skill. Keeping invested, and how to invest that money, that requires more intelligence, and you need to do it wisely, because that is what going to generate wealth, not only for you, for the next generation. I'm talking about generational wealth. I'm not talking about you being rich. Okay, so make consistent investing as a priority, and over a period of time you will see your wealth grow beyond the initial milestone. Okay, so that's it. Okay, let's conclude. This is what I want to tell you lastly. Remember, don't try to time the market or even have a second guess about it. Okay, so don't try to time it. Just stay in the market every time. So if you're worried about market recessions or downturns, it comes and goes. What happened with 2008 crisis? What happened with COVID crisis? Where is the market now? Right? So you don't want to bother. So remind yourself that the markets are cyclical. There are multiple cycles, but but in case if there is a big dip which you're getting there, you need to invest more if possible. Try to average more and try to keep investing less at the top. That's something which you can. So stay invested as long as you don't need the funds immediately. I never keep money in banks. Hardly thousands is what you will see in my bank account. Just thousands. Beyond that, you won't see in my bank account. I have that urge to invest. The moment money goes 1 lakh in the account, I somehow want to invest. I just want to keep it in thousands because there is no other expense, right? Health, you have insurance, and for everything, you have the credit cards if you have any expenditure which is required. So of course, you have an emergency fund also. So the market rewards those who maintain their investments over the long time. So stay there. That's very important. Give time to market and stay consistent, stay disciplined, keep invested, keep invested. If you have not yet started, start today. Yesterday was the best time. I always tell this, right? Did you do that? No. Now, if you ask me what is a second opportunity, so today is the second best time, not tomorrow. Okay. So set your investment plans. If you need any help, you can get in touch with me. Stick to that plan and watch whether you will get your first crore. Let's see. Let's make it together. So first is again develop a skill. Okay. So that's it, guys. Thank you so much. See you in the next session.